Be ready in 1 moment. Let's see. KKKKK. Clear that. We're good. We're good. Okay, guys, what's going on? Ryan, aka Cantor Clark. On behalf of myself and my partner, Josh Rager, I just want to thank you guys for joining us on the Blockroots live stream. So we're going to kick it off in 1 second. I just want to make sure that the sound is good. Got a few people in here. Let people get a chance to get situated. Let's share the link real quick. 1 moment, and we'll be off and running. Okay. Let's head over to Twitter. Pop that up. Okie dokie. Okay, guys, what's going on? Hopefully everyone is doing well. It is it's a rainy, nasty New York morning. Where are you guys all coming from? We have people from all over the world. Sound is good. Good to know. What's going on? Connected MCM. Vishnu, Music, Madi. What's going on? AZ. So where's everyone coming from? What part of the world are we? We all know that I am in New York. I just tried to get my cat on the stream. Does not care to be on the stream. As many of you know, we have plenty of animals. We have plenty of horses, and we just got a kitten. So Aria is somewhere right now. She's behind me, actually. She's hunting me. Brazil, nice. Istanbul, Algeria, cool. So I like this. This is the awesome thing about the internet, as if that list wasn't extensive enough. To be able to connect with people from all over the world. And honestly, I barely see anybody from my neck of the woods. If I could get another New Yorker on here, that would be something, because I honestly, most of the time, everyone is from outside of the United States, which makes sense because the United States is not too friendly when it comes to cryptocurrency. I know that there are other places and regions in the world that are maybe a bit more strict, but at least where I am, it sucks. Being in New York means that I don't have access to really anything, that you can have access to if you lived in some other region, right? Seattle, what's going on? Okay, so it's raining here, AZ. I'm sure you're used to that. Rainy New York day. I like it when it rains. Honestly, it's nice. It actually makes me feel better about being a trader and being so cooped up more often than not. Something that you have to remember: trade-offs for trading. One of them is that you're going to spend a lot of your time sitting in front of a computer, and hopefully you're able to balance that out, right? So we have Singapore, Mumbai. What's going on? I'm a Monero guy. Hey, music. I appreciate that. Exercise your rights, buddy. China. Okay. London. Boston. There you go. Yes. You know what's funny? I piss so many New Yorkers off because I like to wear a Boston hat. So I don't know if you know, if you picked up on it on Twitter, but I like to kind of stir the pot. And I don't know. It's just like kind of locker room behavior, I guess. And I like to provoke people once in a while just for fun, right? Keep it all fun, nothing serious. And the thing that I used to do was wear a Boston hat everywhere and see how people would respond. And now, mind you, I went to university in New York. I grew up in New York, and I didn't care a thing for the New York Yankees. I was raised in a New York Mets household, and I inherited that. Unfortunately, it's a sickness, and yeah. So, Boston. Check in from Vietnam. You know what's really funny about that, Cornholio? I was gonna play a clip in the beginning, and it was gonna be Robin Williams, the Good Morning Vietnam clip. VPN, my friend. I like that. See, there you go. Okay, guys. Well, welcome. Just gonna keep it simple in the stream. What I'm gonna be doing is doing these streams 3 days a week from now on. So what'll be cool is we'll get to know each other, because I recognize you can't forget Cornholio. AZ, I think you've been here a few times. Vishnu, I think I remember you. Maybe Brandon too. So we got a bunch of people. Nasir, Brandon, what's going on? Coin Trader, how unique. Freddie, hello from Belgium. Baton Rouge, nice, nice, nice. So we're going to do these more consistently and keep it casual. I like to do that. I, for those of you that are new to the stream, Blockroots is it is our YouTube channel. The Blockroots YouTube is part of the Blockroots company that Josh and I started going on over 2 years now. And what we wanted to do, me with a background in markets as a trader, now trading for the last 14 years, which feels like a goddamn eternity, because I just think of, wow, I feel like yesterday I was in college. Thinking back when I was 25, I thought I was old back then, and now I'm 35, so it's been a really long time. But we created Blockroots to be, as I said before, a signal amongst the noise. And I know everyone likes to use that saying, but it's true, because when I came into crypto Twitter, I saw people doing things that were just, in my opinion, completely asinine. I ended up learning as a person during that there were methods that, although would not be technically actionable in traditional markets, they work in crypto because it is a very technically driven market. So it is a lot of peer-to-peer and retail trading, and it makes that possible. A lot of psychology, a lot of game theory, a lot of technicals. So we created Blockroots, put together all of this material to provide some type of educational base. And I know that there are plenty of other websites and platforms that do this, and of course. But what we think that we have is the edge in terms of experience. So, I think that I bring it in terms of the market. Josh absolutely brings it as well. So for those of you that are new, Blockroots YouTube. You can follow us on Twitter. My name is Cantor and Clark on Twitter. It's called Cantor and Clark because my name is not Clark. My name is Ryan. One of our horses' names is Clark. Okay, so yes, equestrian, my wife, loves to collect large animals, and I am one of the large animals that she likes to collect. So if you follow me on Twitter, if you follow Josh on Twitter, I'm more than happy to follow you back. But again, Blockroots is a educational platform. So we put together the best way I can articulate it is a shit ton of videos on every single thing you could possibly ask about markets. And I think that that's where we have an edge compared to a lot of your other YouTube personalities who have never really competed in a market but are now competing against each other to get, your attention on YouTube. So this is Blockroots. Okay, we just put together recently our modified and updated order flow and market profile course. So a lot of the stuff that we get into that I don't like to get too much into on the YouTube because it's a little bit more advanced, but it's not difficult. I think we, in total, we have just in this module alone, we have 42 videos on that. So extremely thorough, extremely comprehensive, not just order flow. You want to learn how to trade with RSI. You want to learn about moving averages. You want to learn about hedging, all of that on here. So we did a ton of work in the beginning, and now it just, it's there. It's an archive. We want you to come, learn, leave. That's it. Have a good time while you're here, get to know us, and we don't need your money forever. And the reason why it's so cheap is because we don't really need your money to begin with. We're doing this, and we're able to compete on that level because, I think that we, again, if I haven't conveyed it, we know what we're doing, and we're not here to just sell a subscription service. Okay, definitely not that case. So again, I'm going to try to come on this more often. I'm going to say 3 days a week seems reasonable. Get live, give you guys something to look forward to. A little bit about myself. I've been trading for the last 14 years. I'm based out of New York. I traded equity derivatives. I got into trading futures, traded crude oil, got into trading Bitcoin more recently in my life in the last 3.5, I guess now years, 4 years almost. And now I'm here in crypto predominantly. So I still trade traditional markets, but it's a very passive approach. I am very much indexed in traditional markets rather than trying to be active in them. And the reason is, and I think that hopefully you'll learn this, is that when you learn about a sport, right? You say you want to be a baseball player, and I always choose baseball, but I was a lifetime wrestler, a lifetime lacrosse player, got into golf later on, but I always choose baseball for some reason. You want to play baseball, fine, but ultimately what do you end up doing? You pick a position, okay? Sure, there are people when you're younger, especially you're the catcher, you're the first baseman, wherever the coach is going to put you to really fill that void. But at some point, you have to specialize. And I think that when you find an asset that works for you, it's got a certain liquidity profile, it has a certain rhythm to it. It's like this dance partner in a sense. So I've heard that used before, so I don't know who I might have taken that from accidentally, but that's the best way to put it, honestly. It's sort of like this dance partner. So I am in crypto. It makes sense for me to be here. It's the asset that I am. When I say crypto, I'm talking about primarily Bitcoin. Another thing about myself, I have, I guess some people would say, certain candor in that I am very frank. So maybe that's just because I grew up in an Italian and Greek household in New York, although I just did that 23andMe thing and found out that I have a little bit of British in me, and that my family's from the United Kingdom apparently also. But, who knows what's up with that. As far as I was raised, it was in a Greek and Italian household. And, my grandfather's name is Aristotle Philippus. I won't say my last name before it was chopped. So, certain candor to me, that means that I guess I am a little bit frank when it comes to, I'm frank, I'm honest, right? If you ask me to chart a pair and I think that it looks like absolute dog shit, I'm going to tell you that it looks like absolute dog shit. That's another thing. Okay, this is not going to be the most clean YouTube from time to time. Again, I am very much your New York born and raised type of person, and that's just the way it is. And hopefully you guys can come to appreciate that, because we're not going to be sensationalist here. I don't operate with a prevailing bias. I am bullish on crypto, probably on a time frame that many other are not even considering. But aside from that, my bias is the one that seems to be the dominant trend in terms of what side of the market is in control. And once that flips, I will go from longing the market to new heights to shorting the crap out of it, right? So that's just the way it is. No prevailing bias outside of maybe 10-year time horizon, and willing to flip on a dime when conditions change. So we don't want to be sensationalists at Blockroots. The one thing that we don't want to be, although I am a bit animated from time to time, is we don't want to be this, okay? We don't want to be this. We don't want to be reduced to competing with each other on the basis of font, word color, and then some big face, because that's the way that the YouTube algorithm works. Hopefully we're going to draw attention for the right reason. So that being said, I think as you can tell, I go a little bit, I'm known for rants. I could tend to go a little off in terms of going on these long diatribes. So rather than continue with that, let's just cover some of the more recent news, and then we'll get into the charts. And that's what I want to do. I want to take the chart requests and see what you guys are coming up with, see if I could help you out. This is not financial advice. I'm not giving this tailored to anyone. I don't want you to go take positions based on this. This is how I would approach certain things, right? If you are asking me about Bitcoin, I'm telling you about Bitcoin because I'm trading Bitcoin. Once you tell me something that I am not trading, I will tell you that I am not trading it. I have no interest in trading it, but this is what I see. Okay, we'll keep it very simple, very straight to the point. So in terms of the news, okay, so we'll talk about something that came up, take a few questions. At the end of this, we're going to do another giveaway. I'm someone who loves to give back. Thankfully, I'm in a position in my life where I am able to. If I go to a restaurant, if I'm tipping the person who just gave me my massage, because that's where I came from, I was at the spa this morning with my wife, I like to give back. Okay, so during the YouTubes, I love to do this, where we're just going to give away $100 in BTC. And in the beginning, I was thinking, let me come up with something, clever. No, I don't want to do any of that. I want to just ask you literally what the weather was last week, and whoever could give me the closest answer based on the latitude. No, what I want to do in this one is going to be specific to something that you're observing, actually. At the end, I'm going to say, hey, I'm going to ask a question. The first person that gets it right wins $100. So, of course, this answer, the question, is probably going to be answered faster by someone who maybe has a bit of an idea. But hey, maybe from this point on, you not only try to learn about trading, but you broaden your horizons a little bit. Okay, let's talk about the news first. Make sure that I said hi to everybody. I already like a name already that I saw, Jimmy Trendrix. I love that. That is brilliant. JT, what's going on? D. Ross. Okay, said hi to Freddie, said hi to Brandon, Nasir, Jimmy Trendrix. And that's great because Jimi Hendrix is one of my top 5 artists of all time. He's one of the only artists that I can listen to all the time and I never get tired of. Specifically, Machine Gun, just fantastic. Okay. Hey, Kentron Clark. I don't know how to pronounce that in Korean, but it looks like a fantastic name. Just put it that way. What's up, No Coiner? What's up, buddy? All right. Controlling LARP. Controlling LARP. Yeah, I guess I don't know what that means. Okay. Oh, you called me Controlling LARP. That's funny. Okay. A little late, but I made it. Rolling down the PA Turnpike. All right, okay. Hedging. I like hedging. Baseball all day. Haha. Everybody eat. Okay. I think I said hi to everybody. No bullshit. Thanks, Ryan. Okay. You got it. Encomienda. Okay. Nasir. All right. I think that's everybody. Led Zeppelin's awesome too. Black Dog, one of my favorite songs. Okay. So first things first. CoinDesk news. There's news all over the place in the last 24 hours, especially everyone is concerned with the OKX hack. I don't know a whole lot about the OKX hack. Apparently, it's not anything to do with any of the operations there. It has more to do with, I guess, the founder. Personal reasons. I wouldn't want to do business in that particular region of the world and do wrong by the government. So I hate to, go down that rabbit hole of guessing what is up with that person personally, or what they've done. And that sounded ridiculous because I don't even know who they are. But from my standpoint, what happened that freaked everyone out was that they halted withdrawals, and this is sort of one of those moments where the concept of not your keys, not your coins comes into play, because as long as you're on a centralized exchange, that can happen, right? You have to imagine that anything that is newsworthy like that, that can cause a sort of a knee-jerk response by people in the market, that would maybe make you afraid if you were operating an exchange. Okay, your last thing is like, I don't want anyone to leave. Don't worry, everything's okay. All right. So the last thing that they want, I'm sure, is for people to just start having an exodus out of their exchange, similar to what we saw with Phemex. OKX definitely a leader in the space. I personally have never traded on OKX, but I pay a lot of attention to the OKX market data. That being said, that is an exchange that can do whatever they want. Just remember that, okay? As long as you are playing in someone else's backyard, they can do whatever they want. Okay, so halting withdrawals, I can see why I would want to do it. Maybe if I was in control of a business like that, especially considering how people panic. So as far as anything else goes, it looks like the market is kind of shaking it off. Is there this other prevailing trend that we're starting to see take place? If you guys see me do this a lot, it's not because I have a drug problem. It's because I have not shaved my beard, and my little beard hairs keep going up towards my nose and itching the shit out of my nose. So one thing that I have to do that I haven't done in a really long time is get a haircut and shave my beard. Okay, so as far as the recent trend, it appears that there's a lot more scrutiny on the regulatory front with regard to exchanges. Expect this to pick up. You want to play ball on the macro front, then this is what's going to happen. Okay, so, and as I say, I don't want to itch my nose. What do you know? I'm itching my nose again. One day we'll do a whole live stream. We'll do the manscaping and everything. So this is an ongoing trend, right? We see with BitMEX. Okay, there's more coming out recently about Coinbase and how 1,800 accounts were, I guess, subpoenaed by the Department of Justice early 2020. Okay, another thing to point out, sort of like how the normal media cycle works. When one thing is gaining attention, okay, when one thing is gaining attention, when you're, CoinDesk and you publish a story and it's gaining all of the attention, it's gaining all of the clicks. If you're X, Y, and Z company that's another media conglomerate, another media company, you want to publish the same story or anything like it, because that's sort of the theme of the moment. The more important thing that I think is worth paying attention to is how the market is responding to each and every single one of these things that is being thrown at it. And this is a market where sometimes there's not an immediate response, okay, because it's not exactly in a market that disseminates information immediately. That's why we like to trade this market, because it is very inefficient. So there is something to be said for the market not acting right away. Then there's another thing to be said for the fact that after all this news, we know where everything is going. The market is still maintaining this floor. I think in the last video, I might have not conveyed things perfectly. I watched it again. I was like, God, I sound like a dumbass when I was talking about that. I was talking about the concept of a floor being put in. And again, I think a floor is being put in by the larger institutional players because they have a reason to provide a floor. Okay, so as long as they've taken that amount of supply off the market, I think that we are in pretty good standing with where we sit. I very confident in where we sit with the market right now, but we'll talk about some of the more important levels that once they go, like, it doesn't matter what I think. So not too worried about the OKX thing. This is something that you're going to see pop up, right? And when one bad news story gets released, just understand that this is sort of like a chain event with other news stories as well. You're never going to see something come out that's hyper negative and then, the next post is about something that's very positive for crypto. That's just not the way it works. And that being said, not to get too tangential in talking about this, but or go off on another tangent, but This is sort of how people are able to also identify what sort of the zeitgeist or the spirit of the times is with regards to market tops and bottoms, because you start to see, a lot of negative news, and the market is not what doing. It's not not what doing. What is the market not doing? It's not selling off anymore, right? At highs, at tops, everyone is so positive. Everyone is so positive. Bitcoin just ran, 50%. Oh, we were onwards and upwards, but we're just ranging still. But all this positive news is coming out still, but we're just ranging still. Wait a second, volume's dropping off, but this positive news is there. You're still excited. I'm still excited. We're still partying. No, 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 that's a bad sign, right? So, for example, we do have a considerable move, like I just mentioned, where we did have a big move up, but now we're having this negative news come into the market, and there's really nothing to be said for that with regards to price action, except that this morning, excuse me, I'm drinking Bundaberg ginger beer. I actually watered this down with regular club soda. This is from Australia. It's family owned. I like ginger beer. It's very sweet, so I water it down. But so one thing that we have to pay attention to is that this OKX did have a little bit more of a response with regards to price action, or did cause one. But at the same time, we were not exactly showing the most strength, and we were set up to be in a, I guess, a worse position than if we were actually a few dollars higher. So this is going to get to something that I talked about yesterday with my short. I should have kept that short open. I'll talk about why I should have kept it open and why you shouldn't micromanage your positions. Why did I do it? Because I was at a restaurant. That's why. I did it, because I was at a restaurant. I didn't want to be in a position. I was already in profit. I got like $100 rotation out of it, and I said, whatever. And I closed my trade out while eating a porterhouse. And that's the same. This goes down how I don't even trade overnight really anymore, because I don't need to. I don't need the stress. So when I'm out with my wife, I don't want to be looking at my phone. So I just close trades out. So you can only do that though after you've gone far enough and been able to afford to do that. Okay, so not too worried about the OKX stuff. The more important piece of information that I think is worth paying attention to is this. Okay, no one is really sure how that's going to be resolved, right? Or rather, how that will resolve, what he's going to say. Okay, we know that when Fed chairman says things about traditional markets, okay, with regards to inflation, with regards to anything that has to do with our equity markets, okay, that has a big effect on cryptocurrency as of late. So if he's going to be directly speaking about cryptocurrency, I think that this is something that, I'm not going to position in advance based on what I think he's going to say or anything like that. But I would say that keep this in mind. This is going to be next week on Monday, I believe. So this will be on, it looks like Monday the 19th. Let's just double check that. Yes, so that's 8 a.m. Eastern time on Monday, again on the 19th. So that's coming up. That's after this weekend. And this is going to be specifically addressing cryptocurrency. Apparently, this is a very brief article, more like just bullet points, and thoughts on the digital dollar. So before we get into price, digital dollar, absolutely. It doesn't take a genius to extrapolate based on where we are and see where we're going. So it's kind of like you could just see that everything is going digital. It's really the most obvious thing, I think, that obvious conclusion you could come to, that everything is going to be digitalized to some degree. Does it mean that tangible assets will no longer provide value? Actually, no, it doesn't at all. I think that tangible values will still retain their value. Cash, I think they're going to try to do away with. Cash is the the U.S. dollar is the thing that criminals use the most. Okay, cash is also disgusting, right? So has anyone thought of this? Has anyone thought that we've just depending on, I don't care how you feel about it, right? But let's say we're talking about anything that is contagious. Do I need to even fill in the blanks, right? Cash, something that everyone is passing around. Maybe this is good. Maybe it's a form of, what would it be called? It would be called mithridization, I think. Okay, so exposing someone to like small amounts of poison, sort of the same concept of hormesis. Okay, so maybe over time, cash has helped us to some degree. Right? We won't even go into that ridiculous theoretical framework, but still, cash is pretty disgusting. Okay, so that being said, are things going to go digital? Yes. Is it going to be because cash is disgusting? No, it's going to be because they'll be able to keep track of things a lot easier. So you have to wonder if maybe this crypto thing, this is a conspiratorial way of thinking, maybe crypto is a way of them planting your interest in it, so that finally they'll just start tracking everything. This is not going to be YouTube where we go into those conversations, but it is fun to do that from time to time, right? So that is the news that I'd say to focus on the most. Before we get into any charts, I just want to talk. Oh, this is the Crypto Insights. Okay, you guys are all familiar with this. Go to substack.com, substack.blockroots.com. And you could look at our Crypto Insights. You know, we publish this now it's going to be a lot more structured in that every Sunday I put out a higher time frame post like this with regards to ETH, with regards to BTC, everything I'm seeing, pretty comprehensive stuff. And then Mondays and Tuesdays, Josh is going to put out the alts. And then starting next week, every Wednesday, I'm going to send out a short video that Blockroots members get, period. And it'll be, you know, a very basic tip. You know, this is a stocking stuffer, put it that way. This hopefully will be useful to you, but it's not going to make or break, but hopefully you'll be able to add these things up and aggregate over time and become a better trader. So I posted this morning. I'm going to cover this really quickly. You know, if you're going to be joining the stream later, what pairs are you interested in looking at? That's not what I'm talking about, although I'm interested. So that's actually not the post. So I'm starting to read. I'm thinking that's not the post. The post is, okay, where is it? Here we go. Regardless of what method you choose to trade, you should at least be aware of the majority of how the majority of others do. So maybe that sentence is not correctly written, especially in less liquid, technically driven assets. Okay, so what I'm talking about, and I say, you know, don't like trend lines, too bad, everyone else does, and they'll be selling at the next one. The things that stand out to me, so things that absolutely stand out right away to me that I might not subscribe to, I might not always stick to, but I always keep in mind, are higher time frame moving averages as dynamic support or resistance. So one thing I'm always mindful of, especially if there's a really strong prevailing trend, or if there's, you know, a really weak one, I want to know where our higher time frame moving averages are. One of the first ones I want to know about is the 20 period. Not exactly a higher time frame one. We're going to use the 20 period EMA. Not exactly high time frame. You know, if you're looking at the daily, I don't mean high time frame, I mean longer period. So longer period moving average, it's going to be based on whatever time frame you're looking at. Always want to know where a longer period moving average is when it's a 20, a 50, a 100, or 200. Okay, so in the absence of a strong trend, no, because a moving average is a trend-based tool. So in the absence of a strong trend, if you have a ranging market, you might want to use something more like an oscillator. Okay, so with something like this, 20 period moving average, 50 period moving average, 100 period moving average, these more popular moving averages, meaning a lot of people subscribe to them. If we have a strong trend and we're approaching it from the top side, so the first time that we moved up above this again, so from here up to here, we're very extended from it. So this is, you could turn this into something similar to Bollinger Band, because on a Bollinger Band setup, the 20 period is the center line. So if you're using a moving average, like a fast one especially, so a short one, say this was a 10 and you were very extended from it, you could use that as a mean reversion trading signal. So you could say, well, we're very extended from something like the 8, the 9, or the 10 on the daily. We don't normally stay too far away from that. This is probably a good opportunity to short it back to that. Or to look, at least this is when you start to look. This is not when you just enter in a trade. So that's another thing I think really needs to be defined. What is a criteria that gets you looking? Okay, that gets you really looking deeper instead of, it's a way of sort of filtering things out, right? I immediately know when I have certain criteria based on 3 things, whether or not there's even something that I should begin to look for, okay? Or I think is even worth looking for, put it that way. So when we're looking at a moving average like this, I might not use them that often. You know, you might never use them, but if we're just breaking out of a range, we're extended from one and we're returning to one, if I'm in a short position, I'm probably going to consider at least managing it or pulling it off at that moving average. Now, why is that? Because this is a technically driven asset, meaning that there's not really many fundamentals. You could say that long-term fundamentals will play out, right? Long-term value proposition should play out, but in the short term, the technicals are going to lead, okay, where price is. So if we're approaching something that is really popular, so a method or something, you know, a way that someone trades, if a lot of people are going to be acting on behalf of this dynamic support, it's dynamic because it's a moving average, it's moving, and why the hell would I hold at that area? I don't know something more than them, you know, it doesn't mean anything. The price might still drop, you know, or rather maybe I do. Maybe, you know, maybe this is going to be a longer duration correction, but there's still going to be a lot of gunpowder at that level because you get a lot of people that are stepping in front of it, okay? So you have to be mindful of that. So when we are, for example, if we're just looking at something like more recently, which was a great triangle, and you'll never really see me talk too much about triangles, but I always have in mind if we're forming some type of volatility funnel. So it's a clear volatility funnel. Okay, we're looking at a series of a high, a higher low, a slightly lower high, a slightly higher low. So you're just looking at compression, okay? The structure is very defined. And when you have something like this, and everyone is looking at the same thing, okay, we're all going to see the first time that it breaks out. And it might not be something, again, I say that the concept of the market disseminating information immediately, it might not be something immediately that gets away from you. But if you have, in this case, you're looking at a pattern like this, and you're still thinking, well, the market's not bullish until it breaks above here, but now the market has just left an area that it's been confined in. We have two signals here because you're not only outside of the trend line, you're outside of the more recent high. So there's a guy named Francis Hunt, I talk about him, he talks about volatility funnels. And this is essentially a volatility funnel. It doesn't need to be a perfect trend line, you know, on the way up, on the way down. Okay, it could be something like this, okay, where it's kind of, it's not perfect, right? It looks a little wonky, okay, but things are funneling in that in between here, you see that the confines are becoming tighter and tighter, rather prices are becoming more and more confined. So the break for this trade is not, you know, breaking outside of this level. What it is actually breaking outside of that level, having an expansion that also exceeds what has been prior to that. So what has been prior to this? Well, it's been a story of compression, okay? So just imagine this wave, you know, how things transpire. You get a bouncing ball, bounces, what does it do again? It compresses back to the point, you know, it's kinetic to potential. Okay, the only thing that's going to make that ball again is move again is by something acting on it. Same way with the market. In this case, though, when the market breaks out of this level, and everyone is looking at this, keep in mind, we all know that this is compressing. When you break out of that level and you break a more recent structural high or low, you know, that is two pieces of information that really, in this case, satisfy criteria for a breakout. It doesn't matter that you don't subscribe to that way of thinking. You know, you can't sit at that level on the hope that it's not going to continue. You have to at least respect that. So I guess more importantly, one of the things that I'd say is something that you definitely have to be mindful of is if any one of these levels ever intersect with your take profit, either to the upside or to the downside. So let's say, for example, that we have, you know, this very defined trend line over time, something like this. Okay, that's actually not a good one. I want to have one that's a little bit higher up. Okay, so something like this. So here's a trend line. This is a daily trend line. This has been respected over time. Each one of these levels is not only just a spike, it's a consolidation. So you could see that not only is it that this line is sort of governing the length at which price is traveling, but that battle is starting sooner and sooner. So it's not like price just wicked into it and got rejected. There's actually a fight that's occurring at a lower and lower price. So you get that consolidation each time. You got that diagonal trend line to the downside. And now you see a setup, okay? You know, maybe this is a weekly level up here. Maybe that's a really important level at the high of the structure, though. But you have this diagonal trend line resistance. You see a setup down here that's, you know, your risk. I should take my pen out at this point. And then you're thinking, my reward is somewhere up here. At that point, hopefully all of you would start looking at these levels, period. But one thing you have to keep in mind is, hey, is this thing so obvious that this might come into play? So you might not take the trade here. You might not, I'm not necessarily saying, hey, don't, you know, take complete profit there. But if you've ever wondered why prices sort of stopped in some dead space, and you thought it was dead space, you thought it was like a vacuum and there's going to be no activity there. If you've ever wondered what has stopped price, I would suggest that you go back in time and you just look if there's anything that really stands out as having confluence. So if we just look back at here, you know, even down here, it's basically like we have this triangle, right? So don't deny it. It doesn't suit you to deny things that are maybe obvious to other people. It doesn't have to be the way that markets move, you know, on a global scale. It doesn't have to be any of that, but it is going to be how this market moves in the next few hours after that breaks. So I think that it's always really important to be mindful of how other people are looking at the market. And again, I want to clean up the last live stream because that was kind of, I got all over the place, which as I do more and more live streams, just like anything else, you just get better at doing live streams. So I'm happy that you're here during my more inexperienced phase. So the same concept works with those major contextual levels I was talking about. Like, it doesn't matter what your opinion is once we've flipped a higher time frame resistance into support. The rest of the market is looking at it this way. So don't come at me with your, you know, short at support. It just doesn't suit you to do that. Okay, it makes sense for you to wait for a major level to break before you start assuming the worst. Because again, there's a lot of people that, one of the most important things on a chart is where price has been. Okay, where price is, not where it's getting through time. So again, remember when you're looking at a diagonal line, when you're looking at something like this, let's just extend it to this one now. Let's move the goalpost a little bit. The only thing the price has to do from here to break that is to just move sideways. Whereas with a horizontal level, so something like this, the only thing price has to do, or rather what it needs to do that, which satisfy everyone's criteria, is it has to be there, right? It has to be above that level. So once you're above that level, I agree on it, you agree on it, okay? People that have been on the sidelines forever, maybe waiting for that level to break, okay? Maybe people that have, I hate to say it, I shudder to say it, had a short on, right? On maybe some forgotten account, they're going to cover it there. It doesn't matter. At this point, when you're above that level, the bias of many has changed. So you have to remember how other people are informing their bias. So I think I accomplished sort of, I guess, conveying that in some way that is understanding, because I think the last video we kind of chopped around too much. So make sure you're aware of the more popular methods to look at the market. I'm not saying don't go open up a trading book and look at like Gann theory and Elliott wave, all of these things. You don't have to do that. It does suit you to know the major signals though. As far as looking at the chart right now, right, not much has changed since the last video. Important thing that I'm not sure if I talked about it last time. You get a lot of people that talk about this being the range. That's a lot. This is a blow off top. Really nothing that took place up here. The way that I trade the market, if there was no activity there, it might as well have not occurred. It's going to be a really important level, I think, when you break it to the upside, because you're going to get that psychological number. But in terms of actual resistance, the actual important levels to be at, I think that you could get away with getting involved before that. So I hate to say that this is sort of the make or break level, because you and I know that if we come up here, there's a very high probability that this is not going to act as resistance. It's not going to send us all the way back down to 5K, 3K. I'm sure there will be a ridiculous wick, right? There'll be a ridiculous wick, maybe a longer consolidation, blah blah blah. But I don't think we're looking at something like this playing out, right? More ranging between here for the next 5 years. So more important area on this chart is, hey, where is like really most of the activity came in? So we go to our fixed range tool, we open this up, and we see that between here and here, okay, this is including the first leg. So I want to go from the peak. So we're going from, excuse me, wait a second. I want to include the peak to where we currently are. Because if I include this, it's going to bring a lot more activity down there. We're including just the top. Okay, so fixed range. Okay, so we could see that from 2018, right here, up to this level, down here, these things outside, you might actually call them deviations, right, if you were a range trader. That being said, most of the activity, 70% of the volume, so when I say activity, I'm talking about people participating, actual two-way trade taking place, 70% of the volume is occurring in this darker shade. Okay, so you would call that your fair value level. So anywhere between 12.5 for Bitcoin and 7,000 would be considered that value area. Your fair value would be somewhere more along the lines of the point of control. So depending on what exchange you're looking at, the volume might be slightly different, but it would be around 95 if you're basing it on that sort of auction market theory. The more important thing to note, though, is really nothing that took place up here. It was a blow off top. It's kind of like a vacuum. It's a piece of space. It can't be a piece of space because there's no piece in space, right? It's the ether. It's nothing. So you're going to travel through that pretty quickly. The most important level is actually these highs, which go back to the first area where we started having a good amount of two-way trade was after the move up, this bottom, which coincided with this top, and then extending that all the way forward. Don't worry about the line that's not perfectly straight. You get the idea. These are the confines for this higher time frame range, mostly, right? So the most important levels to pay attention to. I don't think that you need to have me do much more work to tell you that as long as we're hanging out above here, we're favoring one side of this more than the other more recently. Okay, so recency is important because we're not looking at this and saying, well, this range is really even because over here we had a lot of activity down to low. No, how is this transpired in current context? Well, in this current structure, more recently, given how everything is going, we've been favoring the top side of this. And the move down, if you look at this big move here, if we're looking at this under the, system auction market theory or that theory, you would say that this opportunity was very short-lived and the market bid this up very fast. Prices dropped and the market jumped on those low price opportunities. So I think that, again, it's not, the level that we have to break is not too far above us. And I think if we start gunning for, honestly, from where we're currently sitting right now, so getting down to the lower time frames, we'll go to the XBT chart. I took 2 trades more recently, I want to say in the last 24 hours. And these were, I was not trading before that, I think for the last 2 days, really, not in BTC. But one trade I took, was this short last night. So what ended up happening was on the lower time frames, I don't want to get too much into this stuff, but as we broke above here, not only did we have a very nice rejection, but immediately into this level, we started trading below where most of the volume came in. So what I was looking at was, here's the range that we're mostly confined in for this structure, right there. We get this move up, After that move up, we have that single print up there, so that was rejected by sellers, right? Sellers really stepped in right there and exerted themselves. Right from there, you see that, let's see if I could pull this back the right way, go all the way back. So right up here, come on. Up, it's scaling on its own now, it's a pain in the ass. Maybe if I could set this like this. Nope. Okay, all right. So what I was concerned with was right here, where we are trading under most of this activity. So what I was looking at was a lot of volume that came into this level. You're seeing a lot of this in terms of delta, so 15 million contracts bought, rather the delta, the difference between aggressive activity at the bid and at the offer. A lot more buying activity, and that's not a bad thing because that's how trends move upward, but we started trading under it. So when we're trading under something like that, my assumption is that, you should have a very quick follow through thereafter. And if you don't, price has been confined in a range. It's been testing the exteriors of this range. And the further you get away from where the volume came in, i.e. right here, the more likely you are to have those positions kind of puke their positions, spill, get out, split, reevaluate, and try to figure things out again. So this was, more importantly, this was the current value area high. So this was the composite from this level that has been sort of governing our behavior since going back to the 10th. And if this was to be a true breakout, we should have seen that the market was accepted above these levels. Retest here, but I was already, like I said, I pulled the trade off. Now the problem is not the execution, because getting in the trade was fine. I was looking for the market to kind of lose steam to the upside, and then what happens? When you throw something up, as soon as it begins to lose that velocity, it starts coming back in the opposite direction. So what I was expecting was these participants to really just get rid of their position. And I started, I shared this chart on Twitter. I had a take profit down here. I had a take profit, I think I might have had it at 360. So I placed it after, so you could see, where is it? I hate to waste your time and scroll for this thing. Okay, so it was at 11,363, and I got short at 561. Okay, so again, just to look at these levels, 561, I started getting short right here. And the idea was, again, we started trading below that volume, and I was looking for them to start puking. We did have volume on the way up, could have reasonably said it was acting as support. That's fine, but it didn't look like there was much follow through with regards to price breaking out through a level that should have been important. Now, price has been chopping, so again, my assumption after that is this is just the status quo. We're going to test both sides of this range till, eternity. By the time that we get the breakout, no one's going to want to trade, right? Everyone's going to be chopped up. So I closed it out over here. The problem with that is I was still safe and comfortable in entry. I could have very well just left my stop, walked away from this trade, and left my take profit, but I micromanaged it. But again, I did that for personal reasons. I hate to leave positions open when I'm out at dinner. So where we currently are right now, we're testing the underside of, again, this balanced area. So this is our 70% of our distribution is within the structure. Here's how I approach the market, just one of the things I look at. So we have now a few areas in the chart that have shown very firm rejections, all right? Rejections at the highs stand out. You got a few rejections at the high that really stand out. Now this, is bearish when you're rejected sooner and sooner. Just consider the idea of lower highs. So the fact that we came up now and we're accepted above this level is kind of throwing me off, because we came into a level that previously had rejected us, to a great degree, and we're returning to the level. And then again, we're selling off, and who knows whether or not this is OKX or, just having a bunch of things line up in that case. You got a bunch of long exposure up here, and OKX didn't help in that case. But again, now you have this under over structure. So we have one low, another low, and then a slightly higher low, and it's back within the range. So there is reason to say that this is a long opportunity right here with at least a return back to this blue line. Now, why that blue line? So you can see that I have essentially 11,480 and 11. This is right around 11,389. That's the single print area within this double distribution structure. So that is where it's not really a nice double distribution. That's where we had this gap. This area will technically more often than not act as resistance. That being said, if we're accepted above, 11,390 level, I expect us to put in that $100 move pretty rapidly. Looking at this now, okay, in terms of what's going to be more likely the case, if we break below this low right here, I have sort of this box, this blue box, as an indication of where the gap is, the last gap, not the CME gap, the gap in price action. We tested here, so now we have this little spot open, and that's above a previous structure. So these gaps are not really that important to me. I think that, if we start breaking back below this value area, it's done. It's not done in the long term, but when you have wicks like this, many times at the low, these are telling you something. It's saying, hey, we're exerting ourselves right here. We're throwing the ball back. It's still a game of volleyball. Think of this as that shouldn't have to happen too often. If you see an area where the market was, for example, up here, you have a wick up there like that. If we revisit that area, I don't think that'll happen twice because the market has already exerted itself up there. If we're back up here now, well, the person who is selling up there is not doing a good job and likely prices to continue upward. So if we break below this low now, back below this value area really has become, I think now it's much more solid in that if we break back below this, we're looking at 346, consider 300. If we break back below that level, I think that we're coming down here to 11,072. Just rough number, 1172, 1150, doesn't matter. You have a gap right here, though. Price shouldn't be back in here. If it falls into that gap and it does anything more than that right away, I'm talking if we're not immediately back up here like that, then I would consider it being accepted, and it's probably going to come back through this gap down to this next structural, which is a 2-day structure. So if we look at, I don't want to do that. That happened accidentally. So 2-day structure because that's this level, going back to that first low within that range. Again, we're accepted back within a previous range. My system normally tells me that when we gain acceptance back into a previous range, you can mosey on as all that you want Bitcoin, but at some point, you're more than likely, instead of breaking back down below here, you're more than likely going to come back up here. So since one of those, in my experience, has a higher probability of occurring, if the opposite occurs, it's not necessarily a good thing, right? What we don't want to see is price lose this sort of 11,000, 10,900 level. I think if you lose that, you have a few structures that are not in the best position to support, okay? Down here, not maybe in the best position to support. You break below this low, okay, we sit here and we're chilling and we're not coming right away. I think that you're coming back down to right around 11.5. It just makes sense. Good amount of stops down there. I think you get that sort of cascade. To the upside, from here into this gap, I think that into that gap brings us back up to the value area high around 11,005. And then I think that at that point, we're going to be testing at least 11.8, right? Higher time frame picture, though, if we're being honest, always expect things to take longer. What am I seeing? Again, I've gone over this many times. Support tested, one of the most important supports that we've had. Point of control from this range, fine. Sitting above everything I want to sit above. Bearish retest, fine. If this was so bearish, again, think about sellers as them having a job. If you're selling and the trend is bearish, the trend should still maintain this bearish structure. Versus now, sellers have sort of imposed themselves on the market right here, and instead price is actually higher now. Okay, so this, by all means, could still have some shorts underwater that lead us to have a bigger squeeze up if we continue to press upward. That being said, if we maintain this structure for a longer period of time, it just reminds me of doing more of this flat, but on the way up. So I wouldn't be, as long as we're holding 11,000, 10.9, I don't see any reason to really change too much. Don't really see any reason to change too much. I've gone on now, so we're like 49 minutes into it. I want to look at what you guys are saying over here. Okay. 3-minute video lag. Sorry about that. Atlanta, Georgia. What's going on? Okay. All right. Let's see what's up. Let's get this Zeppelin. All right, that was the last one I looked at. OKX is stop withdrew. Yeah, they did temporarily, I think. I'm pretty sure, but I'm not too worried about that. Greatest guitarist to ever walk the earth. Yes. Voodoo Child, Little Wing. What's the other song? What's the other great song? God. 6 was 9. I think it's such a simple song, and it's a great song. You kind of look like Trump Jr. Mad handsome. Get out of here, man. I hate the way Trump Jr. looks. I got these curls, man. My wife is going crazy. I had my hat backward on before, but jeez, my hair is just out of control. Out of control. I put it in a ponytail now. That's crazy. Okay. Smash that like button. Yeah. Man bun status, dude. I hated on the man bun for so long, but now it's a necessary thing. If you don't put your hair in something, I look like a clown. Okay. Your replies to other traders on CT make me laugh all day. Thanks for putting back people in their place. I hate to do it. Like, I hate to be a jerk, but some stuff. Listen, I come from a place where people even when they meet my family for the first time, they realize we're like this. Like, we just break each other's balls all the time, and that's like my group of friends. Like, we just always were like that. It's like locker room shit. So when I do that, I forget that if I do that on Twitter, people have like egos and like persona to protect, and also tone doesn't come across. So you have to be careful, because I don't want to sound like a pompous jerk ever, because that's not how I feel at all. I always feel like, come on, like that. I have a very playful personality. Yeah, Thunderbird Ginger Beer, nice. Ryan, will you touch on short-term skew as you mentioned in that tweet? Yeah, let's talk about that. So I try to keep some of the more technical stuff out of YouTube, but I don't think that that's necessarily I think we can get more into it now, because I think you guys are learning, and this is not something that is too complicated. So if we look at skew, so we could use Genesis, we could use skew. I went to Genesis right now, excuse me. No, I went to skew right now. I have my little hand thing right next to me always now. If you look at skew, it's got a lot of other stuff. I love Genesis Volatility for options data. It's phenomenal. They just launched their subscription service. I don't work with them. I don't get paid by them. I don't get, I have an account. They gave me an account, but I've been talking to those guys since they implemented back in early 2020, early this year, and they just have a phenomenal platform. So I'm more than happy to just like use my platform with my exposure to put someone on that deserves to be. So they have a phenomenal platform, So my point is, I'm starting on skew because skews. So let's go to it first so I can explain it properly. So when we're looking at 25 delta skew on Genesis, it's 30-20 delta skew. We're looking at the difference in implied volatility between if in this case, the 25 delta put, the 25 delta call. All right. And you look at it based on expiry. So if we're talking the near term, we're talking 1 month skew. So it's going to be this blue line right here. So we'll just highlight that real quick. So pay attention to that portion on the chart. So you're looking at implied volatility. So if you're judging options, you don't judge them based on the premium's price. That's not a measure of how expensive or cheap they are. It's based on the implied volatility. Options are cheap. This is going to be basic stuff. I'm not going to teach you about options here. I don't want to be that kind of person. I know a lot about options, but I'm not going to start taking this from a TA crypto thing to trying to act like we're teaching you high-level option stuff. But these are things that you could learn pretty easily. So when it comes to implied volatility, just consider that options are cheap when implied volatility is trading below realized volatility, and options are expensive when implied volatility is trading above realized volatility. So you kind of want to, you don't want to oversimplify this, but you want to be an options seller when implied volatility is expensive, and options buyer when implied volatility is cheap. Okay, this same concept of you want to be positioned before an expansion versus after an expansion. So you want to be selling volatility when it's high. You don't want to be selling it naked though. Okay, and that's not the naked that you're probably thinking of. Plenty of at-home traders, I'm sure they work naked. So implied volatility is how we're going to be judging whether or not they're rich, whether or not they're cheap, whether or not they're expensive. All right. So we're seeing basically where the market is what side of the market is being bid up. So are we bidding up the 25 delta put? Are we bidding up the 25 delta call? So are we betting on upside or are we betting on downside? Now with options, a lot of people in traditional markets use options as a hedge. If you're long structurally the S&P, you're probably going to, if you're long stocks, you're probably going to be short the S&P as a hedge. If you're going to use that as a hedge, you're not probably going to be, more often than not, if let's say you're long Tesla, you're not going to be like buying Tesla puts to short your Tesla position. You're not going to be shorting Tesla. Like people in crypto, they like long Bitcoin and then short Bitcoin as a hedge because they're spot long. That's fine. But in equities, if I'm long a basket of stocks, the thing that I'm using to short is the S&P. So that's why the S&P absorbs more optionality than anything else, than any other asset in the world. So this is, again, showing us where fear is. So if puts are trading more expensively, that is showing us that the market is anticipating, either some type of correction or is placing fear to the downside, right? Versus calls, which you see calls trade more expensively when people are trying to take advantage of upside volatility, leverage exposure to the upside. Now, one thing I pointed out, and it's never that cut and dry, it's never, this is meant to be interpreted also with other things within context, right? So one of the things that I point out is, when, let's say we have price that's forming a base, ranging, some strength in price action coming back, we have a sign that futures are trading below the spot. That's one of the things we look at to say, hey, maybe people are getting it wrong in the derivatives platforms. We have some fuel to move the opposite direction. Same thing with options, right? It's giving us an idea maybe how the market is viewing where we currently are, what the market is expecting in the near term. And if price is not doing much, it could just be a sign of fear, right? And you want to be buying during that period. So what we see a lot of times is over the last few months, last year, that longer dated skew, 3 months, 6 months, has been trading, showing that calls have been trading more expensively. So people in the long term are always structurally bullish on crypto. So that makes sense. Normally crypto is going to be trading, term structure will be trading in contango, meaning prices will be higher up as you go out, and calls will normally be trading more expensively. Further dated calls, you're going to see that people are always anticipating that there's, optimism in the crypto market for the long term. Short dated, 1 month expiry, that's what I'm paying attention to. So when that suddenly starts getting to the point where puts are trading much more expensively, if you're looking at the skew chart, that's going to mean that it's coming up as a positive percentage. All right, so this is different from the Genesis chart. The calculation that they do is slightly different, but that's what you're looking at. Immediately visually, when you see skew up here for a prolonged period of time, above 10, let's say, then you're seeing that puts are trading more expensively. Now, we're seeing that they're actually all in line. So where we currently sit, it's either that, so yeah, this is where, it's not always cut and dry. This is how, you have to obviously interpret things different ways depending on context. Right now, skew is kind of positive. It doesn't look like there's a lot of fear to the downside. All right. Calls are trading more expensively than puts. It's pretty neutral. It's not that bad. It's neutral, right? But let's say that, it is obviously much different than where it's been for the last, end of month of September. What this could mean, all right, is that actually where we sit, and we saw this right here, okay, implied volatility will go down, and that implied volatility will be suppressed if there's a lot of sellers of those options too, right? Think about what makes price go up and down. So maybe in this case, it's not necessarily that people are that optimistic and price is going to go higher, but maybe structurally bigger traders are selling a lot of puts, bringing down that put implied volatility, which is suppressing obviously that skew, giving us the indication that calls are clearly at this point gaining strength in terms of relative implied volatility. And that is because those options writers don't necessarily think that those puts are going to expire in the money. So, if I am selling you, for example, let's see that a bunch of 11,000 puts were sold, we're talking whale money, that could be a hedge, right? But at the same time, if you're selling options, you're selling them because you don't think that they're going to expire in the money, right? And if you do think that they might, at least you'll probably have some sort of leg, whether it's a spread, in that case, you'll have something else in between there and where we currently are. So it'd be like a put spread would be like me selling 9,000 puts and buying 10,000 puts, right? There's a little bit of a safeguard in there. So what I was looking at yesterday was, I just looked at it yesterday, so don't look too much into this. There was a great deal of activity in put sells, which you can see actually it's flipped now, so it's not right here anymore. So maybe that implied volatility is being suppressed because there are larger traders that are selling that downside capture in the anticipation that's never going to be redeemed. Okay. Pattern works. Yeah. What's the trend for GBP USD? Is it a sell? I don't trade Forex, so I can't even go into that. I don't know enough about what's going on with that pair. And sure, I could, I could go off on what my macro opinion is on things, but it's just not my area of competence to where I could look at a Forex pair and give you a good and accurate description of how to approach it, other than from your basic support or resistance, supply and demand zones. 12K to 7K. All right, let's keep it positive, Nazir. I like it. Don't you think see you at 13 is a bold statement? Yeah, of course, but you have to imagine that I'm going to be flipping bearish when it's bearish. Right now, there's no reason to be bullish. And I think that ultimately we're going to come up to 13K. So I'm willing to sort of over-index myself sometimes like that for the sake of having fun. Castles made of sand. Flipmo Squad. Hey, new to the channel. What's going on, buddy? BCH. Okay. All right, so let's take a look at BCH. Okay. Well, first let's look at it relative to BTC. So in a bull market, I want to know how things are performing relative to BTC if Bitcoin is outperforming. You could say maybe relative to ETH more recently when ETH was outperforming. Where's our BTC? Okay, here we go. So relative to BTC, trend is shit. Okay. First levels when I'm looking at anything at your weekly levels, some of your first levels, can't deny them. They are there for a reason. People respect them. And again, it doesn't suit you to not respect them. So first weekly major low over here. Okay, this is going back on Binance. You can see that this major low on the way down did not do much to act as support. Instead was flipped as resistance. This is your last cluster that I guess is the most important one I'd say in this chart. 20 period weekly moving average. You can see how that's lining up nicely with this downtrend. So with where we sit right now, you would need to be taking shorter term positions because you are technically buying into resistance, right? So if we're looking at the daily right now, and we do have this under over pivot that's starting to occur where we're just looking at the change in the advance downward beginning to shift to more of a sideways movement. Obviously retaking more recent highs. This doesn't look like the best test. But again, one of the things to do with the moving average, for example, is we're looking at a 20 period. You could use this to sort of define who is in control. I think this could be temporary control, right, that we're back above it. So I would want to see right now that we're able to, for BTC, against the BTC pair, maintain the top side of the structure and maintain this 20 period moving average. It's generic, it's basic, but it works. It's something to at least keep you in line. Like, am I looking at this on the right side of things? If we're above it, maybe I have to have a little bit more criteria to consider to short it. If we're below it, I have maybe a little bit more criteria before I consider longing it. Still, that being said, you have this major range that's sitting right above us. I really couldn't say that it'd be a good idea to get long this pair until you have a flip of this last major important level. So you can see this is where we came back, had this big breakdown, and it's been that way ever since. So that, again, you can find that first by the weekly, that low right there, and you're looking at, what the hell just happened? You're still looking at, yeah, it comes right to that point. So that's your weekly level. So it pays for you to, it pays for you to respect those weekly levels because everyone else is, right? This retest right there is right at that weekly line I just drew. So until you're forming some type of strength in structure above this level, it's not bullish, right? And Bitcoin Cash was kind of, sorry to pop anyone's bubble, but it's, I don't know, it's kind of irrelevant now at this point. The trend tells you kind of everything. A lot of pairs have lost relevance recently because of this DeFi hype cycle. And it is what it is. You have to skate where the puck is going. You can't marry anything in this asset class. It's too new. It's too new. You can't marry anything. It's like, would you want to, I mean, certain people have, but you going to stick with the first girlfriend you ever had and marry her, right? No, your girlfriend, boyfriend, right? Anybody, significant other. Don't want to say anything that's not correct. Pillow, invisible person, whoever you want to marry. Do you want to stick with the first invisible person that you fall in love with? No. So, yeah. A lot of these older pairs have kind of lost their their spot. Okay. Um, Macro perspective. Let's just talk about macro really briefly. I think that what we're going to see is uh, treasuries, no yield to be found in treasuries really. Treasuries are not an attractive place to be. So I think that you're going to see a good amount of exodus from treasuries. I think that risk on assets right now are appreciating because of that. The dollar in what has been a pretty rough spot as of recently, I think that you're going to see that stores of value continue to appreciate due to a loss of confidence in the dollar. But I don't think, and you're going to see store of values and hard assets appreciate because of the treasury part. So mind you that I think is more important. Um, but I don't think that the dollar is going anywhere. It's a world reserve currency. It is the currency that everyone does their business in. It's not going anywhere. I would hate to have entertained the conversation of the dollar falling off the map. Equities, they're going to continue to move up. I think that equities are on the way to 36 and then 37. It's if you've been in the market long enough, it sounds absolutely ridiculous, but you buy the dip more often than not. You don't always buy the dip, right? But this is not something that you want to be too active unless you're trading on the lower time frames. But swing trading, something like the E-mini or the S&P with like a 2-week time frame, and being over indexed on the bear side of things too often is just so dangerous. This market has, first of all, the S&P is structurally internally comprised of companies that are going to be taken out if they are not considered to be adequate anymore under there's like 4 different pieces, I think in my 4 to 7 now, pieces of criteria to be listed in the S&P. So it's pretty much so how do I put this? The S&P is a chart of survivorship. How about that? That's what it is. It's a chart of survivorship. If you're dead, you're no longer in it, right? If you're new and you're a growing company, you're going to be put in it. So what is this going to continue to do? It's going to be pretty much a representation of, it's obviously more than the United States, but it's going to be a representation of where people are in terms of confidence with our long-term growth outlook. And I think that it's going to continue to go up, right? During things like COVID, you have to remember that wealth is not lost. It's just redistributed. It's sort of like things have to burn for other things to rise, right? It's just the way that the circle of life in markets, put it that way. So I think equities continue to be bid up. Bar corrections. The markets right now are very sensitive, put it that way. Post-election, I think we'll have a more defined idea of where we're headed for higher time frames. So I think that the election cycle right now it's fun to trade, right? But it's also on the same note, it's very difficult to get a feel for things when you have like a tweet that could change the market. And that's not that couldn't happen in the past, but it's like it's a lever, it seems. Okay, so XLM, another one I feel bad for. It's just fell off. It's not relevant really anymore. Right now it's not. So if we look at XLM versus BTC, just an ugly chart, right? Ugly chart. What this looks like, it looks like it wants to do that, right? I mean, you have this higher time frame range down here. Here's the best thing about this. Here's your weekly structure. Again, all eyes on the weekly. Everyone knows where this is. Everyone knows where the more important levels are, okay? You had this break above here. Treated this area as support on the way down, fell back within it. Guess what? You're still back within the range. What this means is that if the market, let's say, breaks down below here, enters back in above this range, covers this low again, you probably just continue to move sideways and do the same thing over and over again. On the flip side, let's say that some development with XLM and you're back above 913 sats. That's a clear sign at that point, I think, that, hey, you got rejected here. Instead of breaking lower, okay, instead of flagging like this was flagging down, instead of doing that, now you're back at the top side. You have a lot of, again, a lot of reasoning at this point that maybe the trend is temporarily changed, but XLM just looks like crap. ETH. ETH is recently starting to show signs of weakness. But I mean, recently when I'm saying that, I'm saying like the last 2-3 weeks. I mean, this is the BTC chart. It was outperforming BTC for a while. Again, I don't think that ETH goes anywhere without BTC. I don't think that BTC goes anywhere without ETH. So I guess, I always have to say, hey, it's all dependent on where the, big guy's going. I think right now, I think Bitcoin dominance is going to go up, but ETH had this underside retest, whereas Bitcoin was able to gain acceptance back within a prior range. So if you're looking at ETH's prior sort of structural consolidation up here, ETH is still contending with that level, and that's why I keep saying that level is not changing. It's 395, 392. And when it's clear as day to me, it's clear as day to you. Um, and once it's above that level, then yeah, then I'll be looking at 475, 450. But Bitcoin did a better job of extending itself into a prior range. But at the same time, Bitcoin didn't extend itself as much as ETH. So Bitcoin is a lower beta. ETH is a little bit higher. ETH's like a 1.4 or 1.6, I think. So it's not looking too bad, right? So looked at XLM. Digibyte, man, I haven't looked at Digibyte in like 3 years, I don't think. Man, DOT. So DOT, I've been saying, has been looking somewhat decent in that it looks like it's lost downside momentum. It looks like there's a good amount of bidding activity in this general area, in that you get a big spill, decent bounce, you get a smaller spill, smaller bounce, but now we have a smaller spill and a larger bounce. So it's starting to look like maybe we're basing out. But again, this is it's going to be very obvious at this point. You have sort of this more recent weekly structure right here, going back to your daily lows as well. So you're starting to see it potentially set up for a turn, but that's still, in my opinion, if we're looking at the levels to overtake, it still involves this. I said last time too, I think I said this now for the last 2 weeks, it's the 450 level. So 450 level for things to have really changed. And then we can start talking about higher prices again. Do I think that this is maybe a change in progress? Yeah, and that gets into like my longer term outlook, and I think that DOT is going to outperform with Ethereum, BTC, and Link. I think that it'll be sort of one of those, I use the term four horsemen to talk about Amazon, Apple, Google, and Facebook. Some people might also add in, who else might they add? I'm trying to think of the other. Sometimes it's Amazon, Apple, Facebook, and what else did I just say? Google, or sometimes people include Netflix. You're thinking FANG. But I think that DOT, it has a lot of backing. So I think that we're seeing that DOT is actually not being penalized nearly as much as anything else. There's a lot more capital behind this too. It's not something that's going to be that reflexive. It's not a $8 million market cap coin. It's it's in the billions. So DOT looks good. But to me, I'm still not going to get actively trading it till we're back above this level. And at that point, I'll add in spot again. So I added in spot. I got screwed over. Exited because it didn't appear the trend was finding a floor yet. So looking for a re-entry into DOT. I think that it would be a good position to play with the other major pairs. Yeah, I don't see a proposition value. I don't see the value proposition for a lot of the other things anymore now that were trying to be alternative BTCs. It's over, man. That's what I want to say. A lot of that stuff, it's over. Too many assets now. Too many of them are going to try to consistently also reinvent themselves to be relevant. So things that they're doing now with the DeFi push, they're not DeFi at all, but they're trying to figure out how to pivot as DeFi. So that it is what it is, right? If you're not in a niche and you're like some other type of approach and you have this other business model and this niche becomes really popular and it's like the new movement, then if you're a dying company, you're probably going to figure out how to become part of that. And even if it means suddenly trying to identify with it. I don't dig Digibyte at all. No. Always somebody on each side of the trade, a winner and a loser. That's right. Check out Anchor. Yeah, XRP I think is done. Anchor. Yeah, you said it twice, so now I'll look at it. Anchor, let's see. All right. That's a big move. What goes up must come down in crypto. If it's parabolic. That's not that big, actually. That's when you consider the scale of other things. So 3x. but actually I didn't even include that from the low, and this is a log chart, so it could be ridiculous. Yep, it's a big difference when you look at it from there, 10x. But still, it already has come back down to the level that it probably will chill at for a while, which is you have a higher time frame range that's governing where price is finding a ceiling, and this is going back into 2019. All right, finally made our way through, retested that as support. After a parabolic blow off top, just consider it a given that you're coming back down to this in crypto. Unless your asset that you found that has a parabolic blow off top happens during the beginning of a major retail bull rush, right? Break of all-time high kind of moment for Bitcoin. That's not now, so Anchor, it looks like it's maybe setting up to be interesting looking, but it's still extended from its weekly levels. It's kind of flagging in the middle of nowhere on the weekly to the downside. It's got this consolidation right here, but I would need to see that this forms a substantial piece of structure. And if you just look at it on the daily real quick, more recent cluster now acting as resistance. So just extend that, right? It could look, maybe this looks something like Link in the beginning. So Link had this sort of W structure. Okay. But again, it still needs to, this is bearish until something changes with regard to the trend, right? So then I could say, hey, I could define a position around it, because if it falls back in line, so let's say it does this, my stop is below here, is because if it falls back down here, it could just be that slightly higher, lower high that's still in the making. And then it's going to lead to continuation. And I say this could be like Link, even though I don't know anything about Anchor, because Link had this sort of W structure early on. Let's go to Link chart. Okay, let's go to the Link BTC chart too. Okay. Which one was I looking at? Oh, no, it was the USD chart I was looking at. So just a similarity between the structure. Mind you, these are different types of pairs. One is against BTC, one is not. So looking at something, like, it's actually more recently the structures look the same, but also going back here. Okay, so these W bottoms. But don't get hung up on the W or anything like that. What we're just saying is this is the structure that's forming. The only way that this is no longer bearish is if it's no longer bearish at the places that it has been bearish for the last few weeks, which is these pivot points. So hey, if we're back above here, this is why I began to get long again Link. Now I got a long spot over here, but again I started getting into a swing position with Link, and I have to check that because I actually might be stopped out. This is against Coinbase, so I have to check on Phemex. So with, I could probably just check my phone because I've been getting alerts, which is nice about Phemex. I noticed that I've been getting alerts lately on my fills. So let's see, Anchor. This is a very clearly defined structure, right? At least with this flip right here. So that's all it is, right? This level. I don't know anything about this pair, but I do know that, hey, I could probably get behind a trade if we're back above this level right here. At least a retest of this structural low, right? And if you're looking at this on the daily, one of the things we were talking about, start reclaiming that 20 period, bearish trend, bullish trend. You reclaim it impulsively, and you have a little bit more of a story at that point. Reclaim it back above structure, above that as well. It just becomes obvious what is already occurring. But again, it's a lagging indicator, but it helps kind of smooth out information and make it that much more hard to deny, I guess. Okay. Dominican, I don't know what you're saying. ML, MBL, N. Perhaps it's rather impossible to answer, but might be trader prepared for Monday morning and Powell Fed. Well, it depends. Like some people might use options to play some type of strangle or straddle. I mean, having your setup and having your areas you're going to define to do business beforehand, that's really all the most that you can do a lot of the times. Unless you're trying to position pre-event, but you always get the possibility that you get a move and you get no follow through. I'm still going to approach it the same way that I approach everything else, but I will say that it is a catalyst. So let's say it's a potential catalyst. So let's say that we get a very bullish response in price action. That added to the mix if you start to see prices resolving bullishly, that added to the mix, some positive words by Powell, that makes that trade, in my opinion, carry a little bit more weight. The same can be said to the downside. So my can't use that word. My opinion is that anything that is said that leads to subsequent price action that moves with conviction, right? You get an impulsive move up or down. If you get that, don't fade that. Or at least, if you get that and you get an opportunity in the short term to take a trade, that's how I am going to be approaching it. Right? If I get an opportunity to enter based on an immediate positive response, I'll take the first leg. Put it that way. Okay. Netflix. Yeah, Netflix is so. The Four Horsemen. Yeah, sometimes people include Netflix and they omit like I don't know how you could omit fate. I mean, you can't really omit. No, you can't really omit any of those four now. You could say rather, excuse me, instead of the Four Horsemen, you could say the Five Horsemen. Sort of the Four Horsemen of the Apocalypse. It's a term by a guy named Scott Galloway, who's a famous professor from NYU. Phenomenal guy. Love all of his stuff. A lot of his lectures are just they're definitely very very good to watch, regardless of what you do. Hey, just join the stream. Love your content. If you have a chance, check out XMR. Just had a massive run up against BTC. Let's look for retrade. Yeah, maybe. So a lot of stuff lately with regard to privacy. Let's see how. So this is a theme, right? And you could take advantage of themes in markets by trading it. Of course, obvious, kind of not necessary to say at all. Privacy coins. With all of this, do they have some sort of secular tailwind now? So we'll look at versus Tether, and we'll look at versus Bitcoin. Maybe I missed it. Well, it's been moving up. You're right. It's been moving up. Limited history on this chart, but if we're looking at the USD chart, and we're back below this on the weekly, not too good. But in terms of BTC outperformance, because that's what you're referring to, I would, when you say pullback, I'm assuming that you mean at least to something right around these levels. So that's where I would say, if you get some type of positive response, hey, even placing some stink bids down here to get that immediate pop up before maybe price settles and comes back in. But this is the area you want to hold to maintain this bullish market structure at least. But whether or not this has legs, that's what I was referring to as to get excited about. Maybe this has legs because of everything we're seeing with regards to regulation. But that's something to pay attention to. I haven't been observing XMR as of recently. Zcash though is having the halving, right? So say they're having the halving as if I'm talking about a sale at the store. Oh, they're having their halving, aren't they? Oh, I saw a banner. Okay, it's doing, it's not doing too much anything different than what we're seeing in the major pairs. Okay. Beast Boys channel got hacked. Do something. I don't know who they are. I don't know what I could do either. What word we're going to use? I always give my opinion. That's what I'm saying. I have to give my opinion. Use your imagination. If you're going to say something to someone and you're giving what feels like an informed opinion, I'll just preface it by saying this: nothing on this channel is financial advice. As you guys know, when I'm talking about things in the newsletter, when I'm talking about things on Twitter, more often than not, I share that thing with the actual. So if you see that dotted line on my Phemex chart, if you see a dotted line that's green or red, sometimes the price I'm talking about is moving upward and I'm looking to get. Sometimes, rather, I'm talking about being in a long and the price is red on that dotted line. That's because I'm in a long and it's slightly moving against me. But most of the stuff that I talk about is, if I'm not trading something, I really would just kind of I'll brush by it. I don't even care about it. So I don't chart things if I don't trade them. And when I chart something, you could bet that I'm going to be in that position. Unless I'm saying like waiting for this response. But, okay. No, when BTC starts to go parabolic, that's when I take risk off the table. Parabolic is something that I don't want to be increasing position size or anything during. Parabolic implies past the all-time high. So there are different types of parabolic, obviously. There are parabolics within micro trends, the blow off top. There's parabolic movements on a 4-hour chart, right? But parabolic on the daily or weekly, sort of like back here. This is, recipe for disaster. There's a few things you could look at to see sort of how you look at ATR and you'll see that it's jumping tremendously. Daily volatility, same thing. Volume beginning to drop off. Again, it becomes very thin, but I won't be increasing my exposure there. I'll be increasing my exposure above this high. Okay, above this high, and after meaningful structure above the all-time high. So even if we do, the best case, in my opinion, is doing something like if the market could approach this all-time high in the most docile manner possible. Let's say that we're moving up to the all-time high like this. Then probably happy to get in even more of exposure up there, because odds are that this is the sort of float, the melt before the big expansion. And during this big expansion, after I'm the worst artist, after the sort of grind and then the expansion, there's like nowhere you can get a big position on in here. You won't see any offers. The price moves up because the asks get removed. No, I'll announce the winner in the giveaway for this video. I announced the last one. They got it right after. Hope next week we get some good news for market. Best scalping strategy for BTC. No, I can't give you the best scalping strategy. What I use is I define where the value is developing. Some of my scalps come off of playing the extremes by standing in the way with limit orders and trying to catch a wick. Some of my scalps, so that would be like bottom fishing, for example, or top fishing. Some of my scalps come after looking at a substantial amount of volume, come into a particular pocket. So I could be looking at a 3 or 5 minute chart. And again, trading within a range, see a bunch of volume come in. Price is now trading slightly below or above, depending on what direction, but yesterday it was slightly below. We haven't really got away from the position yet, but we're seeing not much of a response by buyers to continue to push up. I'll take a trade in that case, expecting that it'll unwind. So it's good if at that point we haven't moved a considerable distance away already, because at that point, maybe they've already unwound their positions and exited, but plenty of different ways to skin the cat, as they say. I can't give you the best one, but what I can say is really first put an emphasis on market structure. So put an emphasis on market structure, and also I would say learn about volume, because not only learn about the volume histogram, but learn about where volume is distributed through a structure. You want to see not where just price has been, but where people have been happy to do business. Okay, so cool. All right. Okay, LTC, and then that's a wrap, I think, because we're about an hour and a half into this. And then we'll do the competition, not competition, the lottery. The LTC, same thing, man. Flagging on the high time frame, that's your weekly time frame, that's your monthly, which is even more. So put it this way, this is nice, right? So this is, let's go to LTC on a longer term chart. I don't want to say it's nice, like it's only one that hasn't really, had a big move yet. And this is a high time frame chart, right? So getting back to what we were talking about earlier, LTC has not broken out of its downtrend. So loosely even, right? Even if you drew it like this, you're looking at this same progressively lower advance that we've made, okay? And we're funneling on the high time frame. It's very obvious at this point. You don't even have to draw for example, we don't have to draw the lines. What we could just do is do this. What are we doing between the structure? We're tightening. Now they've got this deviation over here, but still the next one on, slightly higher, slightly lower high, slightly higher low right here. What this says to me is that something that does this above 65, or something now that breaks below, I'd say right around 41, probably has some extension. So 41 probably leads to at least 24, and then 65, break above here. It's really not much in the way. You're not going to look immediately at this high. I'd say 65, break of 65 at least brings you up to this 100, 120 level. Just think about this high up here. If you look at that, that's the weekly. You have a few daily clusters between there. So above here, yes, you could find some stickiness here, but I think that you're probably making your way up. In the long term, after an expansion like this, if you're doing something like this, you're probably coming back up somewhere up here. But at the same time, this doesn't happen in isolation. It doesn't happen on its own. If LTC is doing that, that means that BTC is on the new highs as well. Okay. All right, guys. So hopefully all of you have enjoyed the live stream. Again, we're going to be doing these 3 days a week. I'm really happy to do these and get to know you guys, and you'll hopefully I'll grow on you in some other form other than a wart. And yeah, so let's do the challenge real quick. So can you guys see what's behind me right now? The first person that could tell me what is behind me hidden in the image will win $100 in BTC. First person to tell me what's hidden in the image, and it's not a Blockroots logo. So if you could tell me what is hidden in the image, the first person. So the first person who says it completely, not just one part of it, not just one part, but completely. Nope. No, it's behind in my square. It's in my square. Nope. There you go. D. Ross wins again. Nope. Nice. See? Here, I'll show you. Look. You see it? All right. DNA. Okay. D. Ross. D. Ross. D. Ross. D. Ross. D. Ross wins again. Okay. That shouldn't be hard. I think I still have your Bitcoin address. And yeah, I'll take care of that in a little bit. Cool. All of you answered. Some of you answered correctly, but, you know, to the victor go the spoils, and you have to be fast. Okay. All right, guys. That covers it. Hopefully everyone has enjoyed the stream. The horizontal lines are, it's an order book imprinted. It's a heat map imprinted over the actual image. Okay. But it was hidden in there. That's why I said hidden in there. Don't feel bad. If you feel bad about winning again, you're gonna have trouble trading. Okay, guys. That covers it. Everyone have a fantastic evening. Until next time, we will talk soon.